bar will show you that when you're logged.
Okay. Hello to I Love Stocks.
Hello to I Love Stocks.
I'm going to turn this down.
I can even see you right now, Jem.
Okay, I got it working now.
I can see you kind of like the lighting's not the best, but I can see you. I can even see you right now, Jem.
Okay, I
Okay.
got it working now.
I can see you kind of like the lighting's not the best, but I can see you.
Okay.
Okay. Okay, I'll hang up so there's no background feed.
Yep.
Okay, I'll hang up so there's
Okay,
no
I'll hang
background
up so
feed.
there's no
Yep, try.
background feed.
Yep. Yep.
Okay, I'll hang up so there's no background feed.
Yep, try. Give me 1 second. Give me 1 second. Okay, welcome to I Love Stocks. Can you hear me? Hello. Well, sorry that took a little bit. I am doing good today. Chevy Blue. Doing very good. Just trying to figure out how to get this thing to work and finally did. We're going to talk about how we get supports and resistances. This has like a 7-second delay. YouTube does. So but I'm excited to show you how to find these supports and resistances and pivot points. So we're going to give it a little bit more time. This will be recorded. So you'll probably have to fast forward it. Not much on editing, but probably not going to be too much watching on it, but that's okay. It is Labor Day. Okay. Well, let's get the thing on the road here. Okay, I'm Jim with I Love Stocks, and we're going to talk about how to find supports, pivot points, and resistances. And here I have like a yearly chart right here. Well, the support area is usually an area where they try to spot downtrends, where they start to pause. And it's very important that you find them areas when they start to pull back and they get in good positions. And then you have what you call pivot point, which is the middle part where they decide if they want to go find new resistance. This is all due on price action. So it's like it's before you go to the highs or before you go to the lows. It decides if it wants to go to the resistances or if it wants to pull back to supports. And so that's what your pivot point area is. And I use it a lot of times as a resistance, and a lot of times I use it as a support. If it has broke past resistance, then resistance is a place where it moves up past the pivot point and it decides to start pausing, to start slowing down. Then it starts hitting different resistance levels. And that's more or less your supports, your pivot points, and your resistance levels. And so in a more or less, it's technical analysis. Use supports and resistance levels to identify price points and on their charts so they could, profitabilities favor or pause a reversal. to prevail a trend. And also, your supports occur when the downtrend is expected to pause due to a concentrated tration of demand. You know, when they're demanding to start getting back in the trade. Resistance occurs when the uptrend is expected to pause temporary. You know, due to concentration of supply. Is there enough sellers in there that for the buyers to buy, or do they want to pause, or are they starting to want to sell to bring the price down? So it's always either supports, pivot points, and resistances, and it's all psychology. You know, it has a major role to do with the way these stocks run. Different traders get in, different kind of traders get in. You got your traders that scalp, and then you got your investor traders, and then you got your shorters to identify chart patterns, when shorts start to come in. It's all based on history. A lot of these trend lines are. So I'm going to pull up this BA chart again. And I was just plotting this out on a yearly chart. I did have it charted up pretty good for tomorrow's run, but I just want to kind of show you where on a yearly chart where you can determine where a channel is, where a downtrend is, and when you start to get in on them support levels or them pivot points or those resistance levels. So I think next thing we're going to look at are just kind of some stocks that I'm watching, and I'm going to try to show you where I find. And a lot of times when I'm looking at a stock, I look at the news. That's one of the most important things that I look at before I get in any trade. So always keep that in mind. But the first thing I do, let's just name a ticker that we talked about, Apple. We know Apple's having a little bit of trouble, with China and the tariff wars. So we're going to pull up Apple here. First thing I do is I go to a yearly chart. I want to look at the yearly chart. History always tells me a lot. I know it had a real hard sell-off back in 2018. Not saying it can't do it again. Actually, the times are worse now than they were probably back then for China. And this was all about tariff talk. And here we are at all times highs, and we're talking about the worst of when they're actually getting implemented. So we had the big sell-off back here on December of last year. As it, the last 3 months, it was really nice here on Apple, and it just sold off, and then we had that recovery. So we're looking at kind of a year chart right here on Apple. And I'm going to erase all these trend lines. Got to get rid of them and start fresh, show you what I'm talking about. I want to try to look for a yearly pivot point or where it pulls back. And the three different moving averages that I'm using are the EMAs. Others use the SMAs. They like to use that 20 and that 200 and the 9. I've got the 9, the 34, and the 200 EMA. As you can see, it pulled back right to that EMA here a couple months ago. Apple did. So that's called a support level. And I'm going to kind of run that up down the level here on a yearly chart. And I start off with a yearly, daily. And sometimes I even pull up a 3-year. Just take a look at it. See where we were 3 years ago. Apple's down here at $100. And it ran all the way up to 220, 233, 47, then pulled back and hit that 200. See how that relies on that 200? Bounced right off that 200. But this was finding the support level. It was pausing. It was consolidating. And once it hit that 200, it said, okay, we've had enough here. We decided to go ahead and turn back around. That's on 3-year weekly. So we're going to pull up the yearly. I'm going to draw a little pivot point where I think support level is. And you definitely look right in this area right here and you see that. So where that base of that candlestick is where I'm going to draw that support line. That's going to be right there. I got to get up here and put this into the support box here. There we go. And that's going to be right around the 170. Whoop, there it is. 173.36, somewhere in that vicinity. And while I'm down here, I might put a couple more right in here, right around the 175.45. Actually, could go a little bit lower, right about there. So we're going to pull up that yearly chart now. Go back and make it a little bit bigger. But we ain't been down there in a long time. But I'd almost call that a low support because of this new channel we've created. And the pivot point's going to be right in this little area right here, which now has become the first support. It's kind of like a going to be our little pivot point on the yearly chart. And right now we're at resistance. Down here is kind of low support. So there's going to be another line in here to make it probably exactly your first support. And it's going to be right here where it tried to pull back before. Right at 193.15. So I'm going to jot me one down there. Run it all the way across where it kind of lines up. And then my next one I'm going to pull right about in here. And this is, we're doing Apple. So we're looking for pullbacks, maybe, if it wants to break below $200. Now I'm seeing some other support levels. I mean, just kind of drawing this up right now. Nothing's final. I'm just looking for matches through history. As you can see right here with this red candle, right here with this green one. It kind of lines up down here with these others. So I'm going to put that right there about the base of them candles. I'm using the bases. And I'm just trying to look for support levels. There's another one right there. So what I'm doing is the extended trend line method. And then we've got some resistance levels. We want to make sure that these bases of these candles match up with stuff that's down here down the trail throughout history, or even up here as history repeats itself up here. So let's kind of bring us down to this bottom part of this base candle right here, that green one, and hit it right there. I see it kind of hit that right in there. It kind of touched up and hit that, made that kind of a resistance here. And also we tried to do that right here. Then we got another resistance, which is I'm going to carry at the top of this base of this one maybe, where it meets up along with all these others over here. So I'll put me a little trend line right there and call that a resistance. I am actually a little bearish on Apple due to the China tariff, but also, you know, when the action's good and everybody's following the trade and the momentums, it's always good in there to scalp it for a good option play. And that's what we do with Apple a lot. We wait for the pullback on it. I called this thing when it was down here. Let me pull it up on the 20-day and I'll show you. Last week when we had that big sell-off, you know, it was on one of my lists to get in and maybe scalp it on the way up. But I'm definitely bearish on Apple right now, a little bit. But I think time wears on, and if they ever do come up with something about the tariff deal, it'll be great. But right now you just kind of play the momentum as it pulled back. There was a good call on that one last week. So now that we've established that, we're going to pull up that 20-day one more time, which we did. And I've seen one other little space right here that I'm going to call support. So I'm looking at a 20-day chart right now. We moved from a 1 year daily, and this method can be, I mean, you can do it with any time frame you want. I mean, the market's kind of like that. You can, so whatever works for one person might not work for the other, but if you have specific tools that you like to use, I like to use the EMAs. If you like to use the SMAs, You know, you could do it also, and maybe in the same time frame, it'd be almost just as good because I have done it with the SMAs. But if you have like the Bollinger Bands or however you want to work them, you can implement that into this extended trend line method also as an indicator for a buy and sell signal. If it hits some of your lower supports, you're going, wow, that band's right where it's telling me that it's a strong buy. The same as the exit, you know, if you pull back on the exit. So Apple here, we've got the 20 days. So what we're going to think, I see more action coming down right around this area here. So I'm going to call this low support right here, just around $199. I think if Apple gets down to 199, that's going to be a strong buy. And I want to put that in a little red marker right here so I can remember that. I'll remember when I come back to this and it hits that 199, there's a reason why I put that there. I'm using platform Ameritrade. And I don't know if you have that same capabilities of changing colors on your trend lines or not. But so that's going to be my low support. Probably my second one's going to be right down here at 202.85 for it to pull back there. And then I see another little place. We got a little sending triangle right here. You got the lower highs, and you got the little flat top you had to break out, and it pulled back. Now I see this a lot. I did this with McDonald's last week. When it pulled back, it kind of did one of these and then jumped up and created all them new highs. And then sold off at the end of day Friday. So I'm going to be watching that one too. McDonald's. Get my revenge on that one. But when they have these, when you can notify this here's a TTM chart too, TTM squeeze. But you can notice them downtrends, and that's the same thing with this one right here. Let me put it on here. Go up to the 20-day. This is my regular chart. You can also see the big trends coming in on the big 1 hour candle. So you see something like that, you're going to think, okay, it's going to be like that the rest of the day. But then look what happened here. The thing bounced right up, started, and that's the same thing that happened here most of the day on Friday when we had that big sell-off on Apple, and then all of a sudden at the end of the day it bounced up to about 50% retracement on it. So they're just trying to find the supports and the resistances where you want to be. And here's going to be my other support that I see right now, this ascending triangle here, this ascending triangle right here, and then I see it kind of touch back and hit that 200, and that 200 is pretty close to it. So that's where I'm going to put that first support level right there. I need to get up here. And I'm trying to get it closest to the base candles as I can on this one here and this one here. The little wicks are just like gifts and little signs of weakness, and I like to sell and buy into strength. And then I see a little, maybe another pullback right in this area right in here. So this is how I'm going to call it on Apple come Monday. Then I'm going to look at the minute. I'm going to go back to the 20. But I'm going to look at the daily 1 minute, see if I missed anything. Yeah, see, you had like a little descending flag, lower highs, and then she went ahead and sold off. Consolidated all day. Didn't do much. So this is one that you want to watch right out of the gate come Monday. Either see which way the direction of it is. Don't jump right in it. Give it first 15 minutes. Then I'm going to go ahead and draw a line right here, just in case. So I'm going to go back to that 20-day. See another little resistance right here. So either way it's going to go. You could either pull back to support level. That third one's right here at 202.85, 204.68, and that first one right there at 264. And that's just where you see the consolidation. So you know where they start to pause, that's where you start drawing your support lines. So actually, I'm bearish on Apple, but I'll play it if the, in an option trade, if the thing's going down, you can play the bear on it. And if the thing goes up, you can play the calls on it. So, there's a couple good places in here on the 20-day where that, a put would have been delicious. This one, and this one. Now we're kind of moving up on a trend. You see, we have your lower highs right here. And you have like an upward wedge on a downward pattern. So this thing could break past. I mean, it can get back up to 210. Or it can dip down to that 202 area. So finding supports. Now, I'm going to go over it one more time. I go to a yearly daily, and I start drawing trend lines to where I see a lot of places where they've consolidated and touched back in history. And then once I kind of find my little pivot point for a yearly chart, I'll draw it in red. The Apple's kind of hard to judge. I would probably bring it down here to this area right in here. If I was being strategic about it, to 186. That's kind of where I really think the pivot point is on the yearly chart. At 186, somewhere in that area. 186.25. But for right now, I'm using this first one, 200, as a solid support area. I mean, it can go down and touch these other trend lines right down here, and that'd be a strong buy, as long as it stays above that 200 EMA. And I'm using these EMAs also as supports and resistances. So like, what's the word with InBev? So I'm going to go ahead and we'll talk about CX. So I guess that's more or less in summary. To become a better trader, you really have to get in here and dig and look back at history. Try to find what history repeats itself constantly in the stock market trends. Learn chart patterns and learn how to find these supports and resistances. Go to the yearly, daily. I go to the 20-day, 1 hour, and then daily 3-minute and 1 minute. A lot of people use the 3-minute because it's more defined. I get ideas on these little candles on a 1 minute. There's a couple minutes you don't see a candle appear and you don't know what it's trying to tell you. So I use a lot of the 1 minute to fine tune it like I would a fiddle. And let me see. And the next one we're going to start talking about stocks. People are going to get in here. And I've got CX I want to talk about, InBev. And so we're going to talk about CX first. CX, it's a bottom play. I was mentioned this last week about it, and it's ran up pretty good since. So first thing we want to do is we want to look at the news and see what kind of news it got, or it's getting. 52-week lows at here, it says. And then it's a concrete company. We got a bunch of projects coming up. So, Ultra Beauty. CMX starts share buyback program. Shares rise on that news. So, yeah. There's a lot of good news coming out with this trade. So, first thing I want to do is I'm going to go ahead and erase all these lines. Show you how I come up with them. Clear drawing set. We're going to try to find the supports, pivot points, and resistances on this chart. We definitely see that 451 up there at 200-day moving average, which, you know, that could be a pretty good little spot because check it out. Now this is almost a yearly, you almost call it a yearly pivot point. You got this area right in here where it consolidated, had like a little descending factor, and then, you know, it held that support level and then broke out of that support. So we're going to draw this little trend line right here, and you can see where it touched back right here and where it touched back here. Also, it wasn't able to try to break that resistance as it went on down and created that 52-week low. So we like the news, and I'm going to take these off for right now, give us some more room on the chart. But this is a yearly chart. So now I'm going to try to find a couple other places where I think we need to find resistance level. And a lot of traders don't tell you how to get to this point when you're looking, if you want to try to use your own figures instead of a Fibonacci or some other kind of tool. These are more precise, I think. So I see a little spot right down here where that base of that candle is. And I'm looking at it over here, and there's another base of that candle right there and right there. So I'm going to go ahead and draw me a little resistance line. And I'm going to call that a hard resistance. When this stock is 375 or it pulls back, and I'm going to put a little support level right here, right at 361. You got the wick of that candle shooting up, and you got the base of that one going down, and it can be in any area right in here. And usually when they pull back, they'll dip down a little bit more and then start creating a little solid support level there at 360 if it decides to pull back, or it could pull back more. And I'll be looking at this little gap right in here. It was done right in here. See if it matches up there. So I'm going to go ahead and draw me a little trend line in there anyway for another pullback support at 340. And that's where I think it could pull back to, or it can pull back a little bit farther. We still have a sign of weakness with that 9 under the 34 and under the 200. If they were all twisted around, you'd have a lot more strength in the trade. But for right now, it's bounced up off the bottom of 282, which is pretty impressive. So I'm going to look for another little spot right in here, and you can see where it kind of stopped right in this area right in here. So I'm going to, and you can see where it closed right here after hours. So I'm going to go ahead and I'm going to draw me a trend line right there at 375 for resistance to break. And this, we're talking about CX. And then you got another spot right in here that I'm going to draw a trend line. And I can use these, sometimes I can use these same trend lines year after year after year if they stay in that channel. They always come back and repeat themselves. Now I'm just doing this up on a daily 1 year. So I'm pretty much solid right here. I might want to go up here just one more high. And if I was going to be, and this thing did break out, this is how I would look at it. You know, this is how I look for those other resistance levels. If this started breaking out and broke past that $4, and that can, because you see a little spot right in here, right around 401, my lucky employee number, where it hits right there. So yeah, so our next resistance is going to be this little spot right in here. Let me magnify this up a little bit. This little spot right in here. I'm going to draw a trend line right there. Now I see how you have all them wicks, how they touch that line. It's pretty solid. That's pretty solid resistance. 406. So if I was in the room and I'm saying, okay, man, we just bust past 4. Well, you better seriously start thinking about what you want to do with your trade. If you're up and you're looking good, scale out some, or because you're hitting a hard resistance. And that's where we tried to bounce down and bounce up here, but she failed, and then she went ahead and went on down. So we broke past 4, and we're going, okay, I think this 407, man, is really going to be a hard resistance. And if we can bust past that, maybe we can take it on up to these new highs. Or it might just want to give up now because it's already had a nice little run here in the past couple of days. And it's up more than $1 something, $1.60 in 3 days. So what kind of risks do I want to take here? And I start thinking to myself, because another hard resistance is going to be up here right around 432. So I'm able to get in and get out of it if I go ahead and get out in the heat, get out at 407 and take a risk, or I could sell some, keep a couple hundred shares, and then maybe get up here to that 432 area and risk maybe, because here we are, man, we're up. You know, the tracement bounce on this is immaculate. And on the yearly right now on the 6 month, the pivot point's going to be right here in this area at 397. So that's going to be a hard resistance to me. And then you get up into this real hard area right around the 407, 408 area. So now let's look at this as a 20-day chart. We're starting to pull back here Friday, so I kind of question it, but we still stayed on that 9 EMA, and that right there, almost close to that 375. Now, a lot of times when I'm in the room, I usually say, okay, we're going to go to the previous day's high, maybe, would be a solid support. So somewhere in this area right here, this is where I would say that 361 is going to be my first support area. That's not a big bad spread. It's only a dime from where it is right now. And that can pull back right there. But I want to draw a couple more trend lines in here just in case. I got another one that I can plot in right here on the base of that candle at 349. Then down here, we're kind of looking at what we had was an inverse head and shoulders where it tried to create some resistance and then kept pulling back. And that one resistance level is right in here at this 320 area. So this thing can drop down. CX can drop down too to the hard which would be a hard support area to me right now, which at one time was a hard resistance. But it did break out of that resistance one time, so that 320 is going to be like my solid low support if I wasn't in the trade, and I was going to set me an alert, because I think it would sure bounce up back to 50%, maybe a 30-cent scalp on that trade as it started to move up the next time. But for right now, we got to break a resistance level of this 382. And I dropped that 382 down there because of what happened Friday on that base of that candle on a daily 1 hour trend. We did have a 384 high. So let's go back to that yearly chart now and see what I've done different. I just created a little bit more blue lines in here, but I also see one thing that I want to jot down before I forget, that $4 is going to be a hard resistance. I want to put this in a red thing, maybe even make the line a little bigger to really tell me we're getting up here to a place where I got to start thinking about taking my profit or taking a risk and hoping it'll go up higher. What kind of news is it, is it running up on? If not, it's always going to pull back on me, and I'll get that second chance to get back in it and run it up. But at least I walked away with profit. But there's a new channel we got to break. See, that's another reason we tried to pull back there and it bounced on up. But this is channel here. If we can build enough momentum and this thing starts to keep up above 4 for the next couple trading sessions, it could be consolidating, getting ready to go back up to that 432 level. And then you've got the regular, which I would call the yearly pivot point on CX right here at 453. Because then you start getting up into these new resistance lines. So this is what I would call a pivot point. If you can see what I mean by a pivot point. For right now, because of the pullback, we've come down here a couple times and tried to hit that. And then finally it just gave up. You see the descending pattern right here. So when you're doing these trend lines, you got to be identifying these patterns, and a lot of these sell-off patterns. But that's lower highs is an indicator that you're going to go down a little bit more. And what you have right here is your every time it wanted to touch down and hit that, it didn't want to do it. So that is a descending triangle. When you see them appear, you'd either start putting your puts in, as long as it still kept disrespecting the 9 EMA, which it did all the way down on a daily. So you could have been safe for this a long time. Then all of a sudden start crossing that 9. So that's when you want to start getting out. And vice versa, start to show strength. But so that's why I say this 453, man, if it ever gets up there, I'm taking money. But I'll probably get out a lot sooner because of this trend line right here. I'm going to put that in there, so don't forget that. But I'm always trying to figure out, okay, where things have consolidated, and you see that little trend line right there. So that's where I put that line right there, just because of that base of that candle. That's going to be like a new support or a new resistance. Then I seen it run up with a bunch of other stuff. So there's CX. And the next one we're going to talk about is going to be InBev. InBev was one of my favorites at one time. First thing pops in my heart on my head on InBev is all the good news that it has, and here we are down at $3. You know, and I'm going to clear this chart up because I want to just kind of clean it up. Sometimes it gets too much stuff on there, and I just want to remove it all and start fresh. So we'll do that. We did have a low down here before off the 200. Now we've definitely disrespected that 200 up in here. And that 9's still down here below that. I mean, this price action is still down below that 9 EMA. But we're wearing down here to a double bottom. As you notice, I'm going to go over here on these wicks right here. And I see this wick right here, this one here, and these touching right here. So I'm going to draw my trend line correspondence to them, not worrying about what I see over here. Now look what I see over here. See, I'm seeing, could be a bullish pattern. Bullish pattern, as I say, because it finally hit a support level. And a lot of times on these downtrends when they're like this and you start to squeeze, you could see a pop to the upside. I'm not going to say it's going to be a very big one. I'm not going to say that at all. But right now it looks to me like we got just no wore out shoe right here. That's starting to consolidate. We hit a double bottom. And this could be a sign of a small reversal to maybe start scalping in a new channel. And that new channel is going to be these highs that we saw right over here. You see how we kind of based up against that. So without looking on this side, I want to draw these two trend lines right here. Just because of this thing pulled back right here and couldn't hold and decided to bounce above it, and it happened many a times. It broke that, hit this bottom support, bounced up, hit that 34 EMA, and then bounced back and hit that 200. But also the base of the candle hit that trend line that I drew up, and then bounced on up, found resistance. Pretty good little spread up. InBev I like, and InBev's real cheap right now. And I think you know, I have to connect this to the pot world. So when the pot stocks start running, I'd be wanting to watch InBev. Excuse me. So we pulled back and we found our double bottom support. And that's where we are right now. We got to kind of figure out where is going to be the pivot point on this chart. You know, what would be a good spot for a good pivot point? And it's kind of hard to say, but I'm looking at this little hammer right here that we had right here. And I'm looking at how many times maybe that could have bounced above it. I'm seeing this little spot right in here off that 200, right about where that hammer is. So I'm going to go ahead and draw me a little pivot point area right in here. The other reason I see is I see a little action going in here, and it finally dipped down below. Then it hit that little line up there and said, okay. So this 473 is going to be my yearly pivot point. Anything above that's going to be resistance level. Anything below that is going to be my support level. And I want to look for trends. And right here is going to be another one. I'm going to draw a little trend line right here, right where this low was. And I'm going to look compared to the rest of them. You see, I'm seeing some action over here. Yeah, so I'm happy where that trend line is. And then I could start fine-tuning it as we go. But right now I'm identifying a double bottom. So if I was calling this out, InBev, double bottom, we've got a yearly pivot point at 473. And then I fine-tune it. I go to the 20-day, 1 hour, and I hit this little spot right here for a couple resistance levels. Then you got the support level right down here. I say I don't want it to go no lower than 295. We can see 282, but I would hate to see it go any lower than 295. Right now, we got 3 resistances we got to break. We need to bring it up, and maybe if I'm got in this, and I started seeing a reversal on InBev, and the volume was looking good, you know, I would say I want it to break. Yeah, I'm definitely going to say I want it to break 320. And you could be saying next resistance level is going to be right around this 312 area, maybe right around 311. If we can bust past 311 and get to 320, I think we can take it to 337. Then we start finding new resistance levels. We probably hit this 337 and pause for a little bit. The reason I'd say that is because we hit that support level here once. We touched it down here. We kind of fist fought it down here. And then we had that descending triangle right here, and it tried to break up and couldn't break it. So at 337, if we hit it, I guarantee hit that 200, I guarantee it. She's going to pull back and hit right back to 320. I'd put 20 bucks at anybody's. I guarantee it. If this thing breaks up, goes past 320 and hits that 337, it will pause, pull back, and hit this little area right in here between 320 and 326. I'd bet my life on it. So that's InBev. Anybody else got a stock they want me to look at that's listening? So I've got, you know, I don't know. Some people, like I said, like to bring it to that 3 minute. The 3 minute candles are more defined. Let's look at Bind. You know, was yelling at the bears on Bind for a couple weeks. They were wanting to short it. You know, there's videos made, you know, saying you're crazy getting in this trade. Well, sometimes it doesn't even have to do with numbers. I mean, sales, you know, aren't real huge on this company. They had an offering, but yet the thing sold off so much that it just got enticing, and the momentum and the news, the forecast. I think that's kind of like how Amazon turned out to be so good. You know, it didn't have earnings for a long time, but look where the price is, and look where it is now. So we're going to look at the yearly chart on Bind. And here's another one that I got pretty well taped up. Called this little support back here a couple weeks ago when I had that pullback. So I'm going to erase all these lines. This is one that hasn't been out very long. Clear drawing set. We've had a couple places now where we've pulled back to support level. I'm looking for a pivot point. This one here, I'm going to range my pivot point area because I'm going to range that pivot point area to a low of 125.93. I get that from right down here on the base of this candle to maybe right in here, right around the 138.80. We see how we touched back here and we bounced up off of it. We touched down here. We kind of hit this spinning top candle right here. creating a body right above the 138.80. So that's going to be like my pivot point for the year. And it's only been out about 4 or 5 months. So anything below this is going to be a strong buy because we've been playing up above a resistance. And I'm still using my moving averages. And I've just got this here in a daily, 1 yearly time frame. It's in a daily, just showing daily candlesticks. So I want to try to find me a couple other spots in here. And you see where we had this little swoop down? See where we got kind of hit all them candles right there? So it's going to be a support area. And I'm going to draw a trend line right there. Pretty happy with that. See how we tried to hit that, and then we had the breakout above it, pulled back, and now we're back up into this other resistance area. So I got to look for some kind of consolidation that's repetitive, very repetitive. See, we had right here a ascending triangle breakout, right here, identifying that with about 6 days. So I'm going to put me a little trend line somewhere above that, where I think that is. And I'm seeing the base of this candle. You know, this candle hitting it, then all these candles hitting this. Kind of goes all the way across, and here we did right after hours. We almost touched that. So that's going to be a hard resistance. If we can bust past that, we're going to get up to these new highs. Now on buying, someone will ask me, Jim, how do you find what's next? What's the next resistance? So I'm going to use this same chart. I'm going to come in here and I'm going to look for that next candle that's above where that base is. I'm seeing this one right here. Right there. Now you do have one that went a little bit lower right here. So, and erase this tight, I probably want to go ahead and say, well, 173, 79, 174.80, somewhere around there. If we can get there, we might be able to bust past this 176.09 area. But that's I'm solid on, and I think we can hit that the rest of the day. If this momentum starts to pick up, I'm buying. And that's the way I did when I called it out down here, pull it to 20 day when I was, and I've got people in here that remember me calling this trade out on this triangle. We had the lower highs. So this thing was just generating a bark because we had that huge sell-off for retracement bounce, and it did pull back again. Then I called it out again, and I was just, I guess, just watching the momentum. So the resistances we got to break. I'm going to go back over here on the 20 day. I'm going to draw a trend line right there, and then I'm going to draw one right here. Then we got another one right here. I'm looking at all these places where it consolidated and pulled back, had that big rush. So now I want to try to find a couple support levels. I'm seeing one right in here. See, you got the top of this breakout, previous day high. I don't want to forget that one. So we're going to come in here. We're going to snatch that right there at 166. Then you got another one right down here at 165.63. And then another one right here. So we're just trying to get this all tampered out. Now I figured out where my support levels are going to be. But I see one more that I can't leave out. And that's where they tried to touch these bottoms here constantly. We come over here and we almost hit it. It pulled back. We stopped right in here on this candle. Pretty solid. So I'm going to try to get these all even as I can. Give or take, you know, a little bit. But see where that lies right in there? I mean, you get good, start getting good at this, you can start seeing that stuff. And that's where you call a solid support level. So let's get back to the 20 day. Pretty excited. I don't think I can get any lower than this 161.51. And if that's me, I'm going to go ahead and I'm going to set me an alert system on it. I want to make sure that I'm going to be able to play this play in case it pulls back. And I've got me a little alert created right here. that thing starts to buzz off, I might be interested to go ahead, because this is a pivot point. You heard me talk about that before. This is a pivot point on a 20-day chart where it decided it pulled back and it just didn't want to go down below too much below that area. So there's a trend line right there that I don't want to leave out either. Is right here. But I mean, it's a place where the stock decided, okay, I'm going to stay above resistance. I don't want to give up yet. I don't want to give up yet. And then finally, it gave up. It went up, did a fake out, and then bam. It must have been news or something that brought this down pretty hard. And it probably wasn't. Just the momentum of the day. And every time I see something like this, man, I'm just, look at that. I mean, when you're bullish on a trade, that's a $40 bounce. Okay, Jace. Okay, I've got a couple others that I'm going to look at. Going to look at, I've got Spot, JC Penney's, and yeah, JC Penney's. Okay, so let's look at Spot. Spot's had a pretty good real run. Same as Cost. But this Spot, man, look at that. Now it's pulled back. Pulled back nasty there, hadn't it? So let's look at the yearly chart. So we're looking at the yearly chart on Spot. We had some higher highs. It did have a nice little resistance level right here, right around the 157.62. And we also had some lower lows where it came back and pulled back right here at 121.60. And had a little pullback right in there. Yearly pivot point on this trade, to me, would be right in, kind of hard to say. I would almost say the yearly pivot point is going to be right in this area, right in here, right around the 148.97 area. So we pulled back below that. Now this is Spot. So we've seen some other times where it's pulled back and created a little support level right in here, right around the 132.50. Now notice, right down over here on this candle, 132.50. So yeah, that's going to be a pretty solid little support level. And we also could pull back to maybe a second to another lower support right here where this candle stuff is showing off right in here. And we touched up right in here. But I'm going to bring it up just a little bit higher, 129.32. And we have another little spot. See it? Right, another one spot. Sometimes I amuse myself. I'm drawing little trend lines. I'm looking for consistency with these candles. So I'm looking and I'm spotting this. And if you do a bunch of couple 100,000 of them, you start spotting them pretty fast. It's all about timing, you know. You want to get in there and get in that trade. But I've always learned not to try to chase and to try to take profit, and sometimes I don't. Okay, so let's pull up to the 20-day now. We got a lot more room we can climb on this. We got to pay attention to the news. We got to see what kind of news it has, and we got to keep an eye on the money that goes into it, and the tape, and the level 2 when you're in this trade. And right now on the yearly chart, we touch this VWAP here. See, it's another indicator. Last time we've touched the VWAPs, this thing bounces up. This here had a real bad day here. Same as right in here, and this was back during the crash. And look how much it rebounded. All went all the way up to that 200. So that we haven't touched, and we tried to touch that VWAP right here, and look what happened here. We had a little run up, we had a little fake out, and bam. And that's another thing when sometimes when I'm watching these RSI crossovers, I'm looking for maybe a double fake out. You get in it, and then it decides to run up, and then it pulls back and tries to hit that trend line that you've drawn up, and then sometimes it goes a little bit below the VWAP, but not as low as the first one did. That's a trigger that you're going to get an uptrend. I don't quite see one here under the VWAP. We had kind of one here pause and it came down, but I'm looking for one that comes back down in the same whack here. Those are pretty good little runners. But right now we're at a bottom. So we kind of, in the pivot point, I said it was right around 140, 141 on the yearly. So that's going to be our resistance we got to get to. We're going to look at the 20-day now on spot. No lower than 132.50. That's got to hold unless it hits that 129.32. Resistance levels are going to be right in here. I'm going to draw me a trend line right now, right here. So we got to break. There's another one right here. So right now we got to break resistance, which was previous high that we had right here the day before at right around 140, 137. If we can bust past that, we can get up to this next channel. That next resistance will be 141, a little under 140.97. Then you got a hard resistance up here at 145. So that's an $11 bounce. So that's about a $9, $10 bounce. Pullback support no lower than 129.32. And we've got that all the way from the year to the 20-day. 20-day tells me a lot. Look at that 20-day high here at 157.94. You know, you get past this 140 and 141, start showing some mustard there, you might hit that. You might hit $5 more on this trade. But you want to see why it sold off so much. You know, what's a down? Why did the downtrend cause this? Is it in the news somewhere that we're missing or that we didn't pick up? So JCPenney's is next. Now, we know that insider biting. We like JCPenney's because it was a bottom play. We learned it at the bottom in the room, kind of to keep a look on it. I was looking at it, but I didn't say nothing. We did have a low down here at this 156 on a 20-day chart. For right now, I got a little pivot point area on the 20-day. You know, we broke past that resistance. We broke past that pivot point. And that pivot point was created because of the double top down here. And then it was rejected, and then that descending triangle that we had right here became a solid place. So I was able to sit there and say, okay, we are at the pivot point. We are at the resistance. We did come up from support. Now we got to break that resistance. Can we break that resistance? Can this next minute candle take us above and hit our other resistances? Now I called this 81 twice, 2 days in a row. So we're going to pull back this 20 again. I'm going to show you how I called this 81 cents. So we're going to pull up a yearly chart. There's some configuration going on up here on the 20-day. We had a descending triangle. So when we got up here to that 81.73 area, that's where I said, okay, this looks to me like a place that's going to be a good solid resistance level. Because we touched down, we come back a couple times, we tried to break it once, we came back, held support, and then finally it gave up and it just went ahead and sold off to this 53 area. So anything above that 81.73, I said, could be gift, or it could run on up and hit these other two candles. These rooftops is what I call them. And then I call the bases of them rooftops foundation where it holds it up, and then I call the wick a gift. You know, a gift. So you got your foundation, your rooftop, and then you got anything above it, the antenna that brings in all the networks and stuff, a gift. And that's J.C. Penney's. So let's look at the 20-day one more time. Insider buy on J.C. Penney's. If it pulls back, 69 cents is going to be a pretty solid support area. Anything below that's going to be a gift. If you can get in at 64, maybe a 67, because of the previous highs. But the lower you get in it on a knife, if you have like 3 black crows, which we had right here, I've talked about the 3 black crows before. Uno, dos, tres. Then you saw what we call would be maybe a rebound candle. As long as it stayed above that previous base, it did. And then she ran up, and look what happened here. As I pull up the chart, the 3 black crows, and you ran all the way up and did 100% retracement from 69.39, which I probably did call in the room because of the ascending triangle right here is a good solid resistance, which now became a good solid support after the breakout, and it did pull back and hit that. You know, that's something I've talked about a lot of times in the room. The previous highs, especially on an ascending triangle, that resistance level will become a solid support. If you wanted to get back in the trade, and that would have been yummy to get back in this trade, because you could have got in there at 77 cents, or at 70 cents, and got out at 80. And that's a 10-cent scalp. But I would have sold it in this area right in here at 77. Because this is gift. This is a sign of weakness. Big wicks. Big wicks like that. Look at her. Bam! Pull on back. Went that previous high that we had pre-market. See that? Right in there. You see these little 1-hour candles? Look here. Where she kind of said, okay, that's where I want to rest. So that's where I'd call a trend line. That's where I put a trend line right in there. That's pretty solid. Now I'm just getting these on hours. Then we'll go to 3 minute. There's nothing I missed there. Maybe just right down here would be a low, 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 low. But actually I got it going down lower for my support level. And resistance we got to break, still going to be that 81.73. So that's J.C. Penney's. Anyone else have one they want me to look at? People are starting to get kind of understanding how important it is to identify you know where your support is, know where your entry is, and your exit before you get in any trade. Say, okay, I know it can go up to 81. We're only halfway there right now, but I know in my heart that 81 is going to be a solid resistance, and we're going to have some trouble there. And if we get up there and it starts to show a little bit of trouble, should I go ahead and take my profit? Or should I go ahead and go in this for the long run? We've got people in this room that stays in trades for years, and I don't understand why, but you know, I'm there to take my profit. But if you're that confident in the trades, you have all right to do what you want to do, how you want to trade it. But when you're messing with penny stocks like this, and you're up 30, 40, 50, 60%, you know, nobody makes that kind of money in a year. They're lucky to get 5 or 6, maybe 10. So, yeah, I'm always thinking about that profit. Know when to get in a trade and know when to get out. Identifying a pause when you're coming to supports identify them pauses in the tape, the level 2, and keep an eye on the money flow. Always have a target area where you, and the same as a stop, a place where you, okay, I don't want it to go no lower. You always hear me say that. I don't want it to go no lower than this. And recognize them chart patterns along with your trend lines, and try not to overcloud your charts. So I think news, that's probably about it. Just identifying supports, pivot points. I usually go to the yearly, daily, 20-day, 1 hour, and then the daily 1 minute and 3 minute. And I think that's about it. So is everybody satisfied with today's lesson on Support 101? Let me see if there's anything else I can talk about. I'll talk about a couple more tickers. Okay, let's talk about, I know earnings are coming out on the stock here, and I know earnings last time were good. And I know that the stock itself is having a slump, same as the sector, and that's the pot sector. So I'm going to go to ACB right now, and I've got it up on the chart. I know earnings are coming out soon on ACB, and the way I find that out is I just go ahead and type in, here we can type it in on this one here. Type ACB stock earnings, and the first thing pop up should be, well, it's not in there. I'm sure it's going to be on the 12th of the 21st. Talked about this already once. Anybody know? Huh. It's funny it came up the other day. Okay. September the 24th. There we go. So I know earnings are going to come up on September 24th. I do know that. I had to do a little research, but I finally found it. So I'm going to look at the chart. I'm going to look at my TTM squeeze chart on this one here. And I know I had a target down here right around $5. 538 actually. And I haven't done nothing to this chart. And I'm going to look at something and see why I pulled it back to that area. Yep. And we could go back a little bit more to this 467 area. But I know earnings are coming out. So this is going to be a trade that I want to look into options. I'm going to try to look for maybe a 6, see if I see any action in the auction chamber. Auction for about $6 strike. Come out before, somewhere maybe before the earnings come out, or maybe just right after, and see if I can find something real cheap. But I'm looking down here at the yearly chart, and I see a yearly pivot point right here at the $6 area. And that price exactly is right around 617. So we've pulled back here. ACB, we can pull back a little farther. We've got a support level down here at 494, and maybe even right in this area right in here, right around the 516, $5 area. So it can pull back a little bit more, but we're going to keep this one on watch next week because I know the yearly pivot point's right around the $6 area, and we're below that now. So we're going to start curling off. We're going to start maybe hopefully start to turn this thing around, get back up here. We've got a lot of high hopes on ACB. It's just not right now. So that's just things I'm trying to look for, trends. When the pause starts to occur, have we hit a support area? Another one, let me think. One that, there's so many good ones out there. I called Netflix NFLX last week. I said, we're down here hitting an area which really, I mean, this thing's really sold off real hard. It did have, the only thing that I think I see negative on this triple top up here is that this lower high, this last one, just didn't get up to that resistance level. And that resistance level had to have been right around that 384.86 area where I'm seeing on the bases of these candles. We did touch it, but we just couldn't. And then all of a sudden we had that big crash, and we scalped this in the room a couple times when on these rebounds. So last Friday she bounced up a little bit, and I had this call on here, and I ran it up, and I did pretty good on it. But if I'd have held it, I'd have done a lot better. Let's say another 300% on the trade, or 200 for sure. But just got to watch them momentum plays. But we're way oversold down here. You know, the pivot point on the yearly charts right up here around 319, 320 area. That's where your pivot point is. Anything below that's oversold. Anything above it, it's your resistance area. And I call that 319.85 a pivot point because where we landed right here. Where we landed right here. Where we tried to break right here. We did break. We tried to pull back and just couldn't do it. So yeah, that's the yearly pivot point. And right now we've pulled back tremendously. And I was alerting the room last week. So let's pull up this 20-day and I'll show you what I was looking at. We had this double bottom right here. This double bottom. And when it came back down and hit that double bottom, that's when I called it a buy. And the thing bounced up a little bit and then pulled back and then created another double bottom. And there you go on Netflix. And I was down. You know, I got in it here and I was down on the trade. And then all of a sudden it bounced back. And when it started to bounce back, I started getting happy. And so I sold it for 100 and some percent. But I could have sold it for a lot more. Then we had the double top and she gave up. It's always good to look at these charts. See, we had a little bit of, so that's kind of like a little resistance. At one time it was support. Then once it failed that support area, it became resistance. Double bottom, double top. Recognize that. Double bottom. Then we had the descending pattern, lower high, telling us that we were going to go down farther. So every chart tells a story. Just got to figure what chapters you want to leave in and which ones you don't want to read. So I think that's about it. We got Netflix. So what I'm saying about Netflix right now, if you're asking me, I'm going to say support level is going to be right here at 290.61. If I can get in this trade, and I'm going to go ahead and type this in the room. I'm not typing in the room, but I'm going to set an alert right here. 290.54. I'm going to bring it up to 61. Actually, we're at 65. Give me some time to think about it. There's my alert set. So when I come down here and I touch it, see, it can touch higher. I didn't recognize this right here. It's 291.11. So maybe I want to adjust this 291.11, 291.65. We'll just go with that for right now. That way I'll start looking at it. If we get down there, that's still another 60-cent dip. Oh, I got 297.20. That's perfect. Perfect. And, you know, I'm looking over here. It could be adjusted up a little bit more. Could be another alert there at that 291.60, like I said. So we'll just keep an eye on it. Netflix. But I'm just trying to always look for the consistency of history to try to find a support level. And then my resistance will definitely be this double top breakout. The pivot point will be right here where the M is, right at 295.84. That's going to be the hard resistance to break. Then we've got that double top. So every time we get to a resistance area, it gets more difficult. The higher the price, and they can knife on you. See, you know, you've had this consistent day pattern. One day it's green, another day it's red. You know, it holds that trend. We had the red day Friday. Maybe this thing can turn around and break that double top. Get back up to this 303 resistance area, and that'll be glorious. So that's Netflix. And let's do McDonald's. McDonald's is one that I called out when I found support level. Got it on right down here at this area right in here. We did have kind of a little fake out. It did touch the trend line, and it's bounced off of it every time on the way up. But I made a foolish mistake and bought this stock up here at resistance level on the pullback when it hit that support, thinking that we are going to get another breakout, maybe up here to the next resistance, and I was going to get out of it and scalp it. Instead, Friday, just an ugly day, Friday came, and you know, I took a loss on that trade right there. That was probably one of my top stupid mistakes, buying into it, knowing I'm going to scalp it the next day, and the biggest part about it is not figuring in the holiday, that there'd be less traders, less volume. I mean, the options weren't even moving at all. There's nothing in there. So, you know, so this is that was a bad trade. But I'm not giving up on it because I called it down here, made some money, and then made some money on here, and then the next day thought I could get back in it, make more, and bam, you know, I got complacent. So now I've got to wait. We're right here at the pivot point area in this channel. If this thing can pull back to this area here at 214, I'm back in the trade again. But, you know, I'm going to call support level right in this 215, 216 area. If it pulls back there, that'd probably be my first entry. But if it holds this trend line, it can bounce up and hit this trend line right here. But we had lower highs and higher lows. So we just got to see where this trade's going to take us, and that's going to be McDonald's. My resistance level is still going to stick up here at 220. So I think that's about it. Supports, pivot points, and resistances. Always let the market dictate how you trade and take profit. Yeah, I just want to say thank you to everybody. And I love stocks.